All right, everyone, we have a full session today, so we are going to go ahead and get started. I am Amanda Lakin with the Nevada Housing Coalition. If this is your first luncheon learn with us, welcome. We're very happy to have you. Two very quick announcements. First, for our coalition members, I just wanted to remind you in just a few weeks, we will be hosting our housing policy forums, one in Las Vegas and one in Reno. If you're interested in housing policy, this is a really great event to get together with fellow coalition members. We will be sharing more about what the coalition is planning for policy priorities for the next legislative session. We're going to have a great lunch. There'll be a very fun breakout activity for you where you can ask some questions and learn more and provide your feedback on the policies that we're thinking about for next year. We also have some guest speakers. So I will provide the link to register for that in the chat. And then also for everyone, in just 3 months, we have our 2026 Nevada Housing Conference Beyond the Blueprint. Registration for that is open. Early bird rates are going to expire at the end of July. So again, I'll throw the link in the chat for that. It's an amazing event. We're expecting between 350 to 400 affordable housing stakeholders, and we hope you will consider joining us for a great 2 days of networking and education. So now I am very excited to turn the session over to Katie Coleman, who is the Communications Director for Nevada Rural Housing. Katie, take it away.
All right. Sound check. How do I sound, Amanda?
You sound great.
All right. Perfect. Well, thank you everyone for joining us for today's Nevada Housing Coalition webinar. We're going to be talking about the path to home ownership, which is really exciting. June is National Homeownership Month, which makes this the perfect time to talk about what it takes to buy a home in today's market and what resources are available to help folks get into affordable home ownership. Homeownership remains one of the best ways for families to build long-term financial stability. It really builds opportunities to build equity, establish roots in our communities, and create a foundation for future goals like education and small business building and all sorts of exciting things that life may hold. And for many households, the home becomes the biggest asset in their lives and an important source of that generational wealth. But as we all know, homeownership isn't just about the finances, really important piece of it, but it's also a very emotional journey with feelings and all sorts of good things to come with it. Stability, belonging, and having a place to call your own really is what drives that hope for home ownership. So we know today's market can feel really challenging: interest rates, home prices, inventory shortages, down payment requirements. That leaves a lot of folks wondering if they're even going to ever achieve this. The good news is there are tons of resources available. We're going to hear a lot about that today from the experts who work directly with our home buyers every single day throughout Nevada. We're going to talk about current market situation, common barriers to home ownership, the assistance programs that help bridge those gaps, and how we can better connect buyers to opportunities that are here right now. So I'm going to very quickly introduce our wonderful, brilliant panelists, and then we'll get into it. So we have Jorge Montoya. He is a mortgage consultant and sales manager with Guild Mortgage and a wonderful partner of both Nevada Rural Housing and Nevada Housing Division. We have Josie Hatem. She is the homebuyer program specialist with the Nevada Housing Division. We have Kevin Hickey, our homeownership programs manager here at Nevada Rural Housing, and Christopher Mora, our digital communications manager at Nevada Rural Housing. So, Jorge, we're going to kick things off with you. Let's start with the question that's on a lot of folks' mind. What does today's market actually look like for someone to buy a home?
Absolutely, absolutely. So let me just do a quick screen share to make sure that everybody can see what I've got here.
You look good.
Can you see my screen?
You got
Thumbs up. I got to tell you, I'm an interactive presenter, so give me a thumbs up in the chat. Please let me know that you can hear us, see us. Questions, please let us know. We're happy to be here with you. So what I want to talk to you about today is the state of the market as perceived by what we're seeing nowadays. So in today's discussion, we're going to go over a few things. We're going to talk about interest rates, what's going on. Thank you, Ruth, for the thumbs up. Appreciate it. We're going to talk about inventory, affordability, and of course, home buyers. Who's winning? Who's losing? What are they facing? So having said that, let's jump right in because I have a lot to share with you. So when it comes to interest rate, the current rate environment is this. we're in a higher for longer interest rate environment, especially compared to the ultra low rates that we saw in 2020 through 2021. But I will tell you, stability has improved. If you look back at interest rates from October of 2023 through about February 2026, we were heading down slowly but surely. And of course, we got into this war with Iran, and that created some unpredictability. That created a lot of movement, and we saw some fluctuations. So the good news is, for the moment, rates are still fluctuating, but within a narrower band. From like February to like March, you saw a lot more fluctuation amongst interest rates, but at least at the moment, that fluctuation is narrower, giving buyers a little bit more predictability amongst the volatility. Many experts in regards to the interest rate environment are expecting a gradual easing, not dramatic drops. So waiting for 3%, which many families are still waiting for that, it's just unrealistic. Highly unlikely that we'll see interest rates that low unless something wild happened within our economy. So I mentioned a few moments ago, October 2023. If you look back, there's a great page that I like sharing with clients and business partners called Mortgage News Daily that lets you track interest rates. So if you went back to October of 2023, the average rate for someone with a good credit score, let's say 740, was like 8%. Now, of course, you could always buy down the rate, right? But 8% was the average rate. And then if you track it all the way to February 2026, this year, it dropped to like 5.99. And I share this why? Well, because it took just over 2 years for us to see a 2% drop in rates. So when these experts are talking about a slow easing of rates, that's what they're talking about. Right now, we've spiked up a little bit, and what goes up will come down, but it's just going to take some time, right? It's just going to take some time to see that improvement. So when it comes to inventory, the challenge is still there. We still don't have a lot of inventory. And some of the reasons many markets have a tight inventory is because of the locked-in effect. There's still a lot of homeowners holding on to sub 4% mortgages. Now, I will add this. Something interesting that I've been noticing here in the last 2.5, 3 years is that more and more families are letting go of those interest rates. Now, they're not necessarily selling, but with interest rates rising, it's not just mortgages rising, right? You've also got consumer debt. So those high interest credit cards going from 10, 15, 20, 30%, that's putting a lot of financial pressure on families. And now we're getting more calls, more questions, more consultations on strategic debt restructure. Because some of these families are facing this pressure, and now they're having to choose, do I pay the mortgage or the car or the credit card? Because these payments are getting a little bit wild. Not ideal, right? If you could keep your sub 4% rate, awesome. That's what we would highly recommend you do. But many families are being faced with the financial pressure of having to restructure debt in order to create some breathing room with their monthly expenses. So I point that out because it'll be interesting to see how moving forward, whether we'll see more of these families let go of these lower interest rates, which would then mean down the road, maybe the possibility of them wanting to transact, like sell and buy something different, becomes a little bit more possible, which could help with inventory. New construction, builders are doing a great job. Keep it up. It really helps, but we're still limited. In Northern Nevada, here where I'm at in Reno, we still have a lot of construction, but there's still not enough. Inventory has definitely improved slightly, but it's still below pre-pandemic norms. And right now, being that we're in a cyclical industry, kids are out of school, nicer weather, we start seeing more listings coming onto the market. So that is expected for this time of year, but it's still not enough to fully balance, the supply and demand that we have. So inventory continues to be a challenge, but thank you to the builders that are building, because it helps. It really, really helps. Now, speaking of affordability pressures, here's one of the biggest challenges that we're seeing when it comes to affordability. Higher home prices plus elevated rates equals higher monthly payments. And this is really the big shock to a lot of would-be homebuyers. especially when they're doing the research, because home buyers these days do a lot more research than they used to. They're going on these sites and they see the $500,000 home, and then they see this beautiful low $2,500 payment. So now there's an expectation set. But then many of them don't realize that you have to like click on that button and expand, and then it reveals that to get that lower payment, it takes 20% down, which is not a lot of families. So then now when they see the real numbers, there's that payment shock. So what does this mean? Well, buyers are having to adjust. And the way that they're adjusting is they're looking for smaller homes, maybe different neighborhoods, and just being a little bit more flexible in order to get into homeownership. One story I like sharing with clients all the time is my personal story. So I was a first-time home buyer in 2011, and I wanted to be a first-time home buyer in South Lake Tahoe. Unfortunately, that wasn't my reality, so I couldn't do that. So I bought in Reno, Nevada, which I love. So in 2024, I became a homeowner in South Lake Tahoe, but it took some time. And the reason I share that with you is because home buyers today need to hear stories like that. That yes, this first home may not be what you really, really desire, but it can definitely be, and you said this word, Katie, and I love it, bridge. It's the bridge. This one can take you to the next one, to where you want to be. So I always like reminding would-be buyers on how that possibility is there, because it worked for me, and it can work for many more families. Now, buyers are also adjusting by utilizing rate buy downs. Rate downs are amazing. It creates some relief and relieves the affordability pressures and payment pressures. And of course, that is thanks to a lot of these seller credits that we're still seeing occur, which I'll touch on in a little bit. And of course, the rise of creative financing. So when I say creative financing, over the last 2.5, 3 years, we've seen a lot more non-QM mortgages come onto the marketplace. For those of you not familiar with non-QM mortgages, you've got your traditional qualified mortgage, which is, your FHAs, your conventionals, you verify income with your tax returns, pay stubs, W-2s, the traditional way. But not everybody fits inside that box, including first-time buyers. We've got a lot of entrepreneurial buyers, right? We've got barbers, we've got self-employed people that write off everything under the sun. They're allowed to. That's part of the tax strategy. But then when it comes to homeownership, it becomes a challenge. So non-qualified mortgages is just an alternate mortgage. It's still fixed. There's still good loans that are performing. They're actually getting paid back. But a non-qualified mortgage would be, one example is a 12 months business bank statement. If I'm self-employed and I write off everything under the sun, but I provide you with 12 months worth of my business bank statements, then now from a lending standpoint, I can arrive at a qualifying income and still, get the financing needed. So the creative financing has been a big help with the affordability pressures. So affordability doesn't mean impossible. It just really means you need a strategy. And that's what today's home buyers really need, is the right strategy, because it is definitely not impossible. Okay, so let's talk about the first-time home buyer experience. And here's what first-time home buyers are seeing. One, they're feeling overwhelmed by monthly payment expectations. Like I shared, they go online and they see this information, and I'm reminding them, hey, look, these sites online, they're marketing companies. They want you to see what they want you to see, which is beautiful homes, low payments. And those payments can be real, but when you look at the fine print, it takes a little bit more, than a minimum down payment to reach those payments that are very, very attractive. So that payment expectation, we're having to work with them on resetting what that really is. They're also experiencing frustration, still comparing rates to what they heard about in the past. And I think this continues to be a big obstacle in the home buyer experience, that they're talking to someone that maybe bought in years past when we had sub 4% rates, and they believe that that is the norm. But it isn't. That was a very unique time that we lived, and it's never been the norm. So something that's really interesting in the first-time home buyer experience is that we are actually seeing that many home buyers are better prepared than ever. higher credit awareness, and higher savings discipline, which is really fascinating. And I attribute to this to a couple of different things. Number one, social media. With social media, you can share more and more information. And you probably follow some people that share some good information when it comes to real estate and mortgages and just overall housing, just as there's some characters that will share some stuff that is maybe not so good. But social media has definitely allowed the information to be shared a lot faster. The second thing that we know for sure is artificial intelligence. I'll give you this example. I love steak tartare. Anybody else like your steak tartare? I know it's an old school dish, but I love it. So guess what? Your boy here went to ChatGPT, asked it, hey, can you teach me how to make steak tartare? Now I can make steak tartare. It's pretty dang good. If I ever have you over, I'll let you try it. But my point is this. Home buyers are more educated today because they have the chat GPTs, the claws, the different tools out there. So their learning curve has sped up. So we're getting better questions from home buyers, which is creating a unique challenge for lenders and realtors, which we'll talk about in a second. But next, programs and assistance options are expanding. Man, I go back to when I was a first-time home buyer. And in 2011 versus 2026, there's way more options today. So thank you, Nevada Rural Housing. Thank you, Nevada Housing Division, for providing us with more options, because today there is definitely more available than there was when I was a first-time buyer. So, and of course, programs expanding, right? We talked about the non-QM space. The mortgage originations in the non-QM space, which is the alternate financing method I shared with you, has been growing year over year. And it's here to stay. Unfortunately, non-QM has kind of a bad rap. I used to think non-QM was a negative thing because you always thought about interest onlys and negative amortization. But the non-QM space today is a little bit different. It requires a little bit of a higher credit score, a little bit more in savings, a little bit bigger down payment. So the expansion of programs has helped with the first-time homebuyer experience. So to close on the first-time buyer experience, first-time homebuyers today are definitely smarter, more patient, and more strategic than we've seen in years, which is a very good thing, but it does create a unique problem, which we'll talk about here in a moment. Now, buyers are still winning. People are still transacting. Homes are still being sold. Homes are still being bought. And here's how buyers are reaching the success. Number one, which connects to the unique problem that I talked about, is they're working closely with knowledgeable lenders and real estate agents. And when I mean on the unique challenge is that real estate professionals and mortgage professionals need to be better prepared today, because consumers have more access to information. So when you meet with them, if they feel like they know more than you, that's not a good thing. That's not a good thing, right? So from a lending standpoint and real estate standpoint, we need to be educating ourselves way more than ever. We need to be aware of the different financing options and programs and just everything that is available so that consumers don't lose trust. And I'll give you an example. So I would say probably in the last year and a half, 2 years, we've been getting more second chance looks, meaning somebody went somewhere, they got into contract, they got some information, there was doubt, then they started exploring. Same thing on the pre-approval side. They got pre-approved, they went somewhere else, they got information, there was doubt, and then they started exploring. So this is the unique challenge that is presented, which is a good thing for our industry. As mortgage and real estate professionals, we got to level up. The first time home buyer's been leveling up. We got to do the same. So next, successful home buyers are getting fully underwritten up front. This becomes really, really valuable. If you can go out there in the marketplace, especially in high demand areas, and say, hey, I'll make an offer, I'll close in 11, 12 days. That's really attractive. So working with a lender that can provide that service is a really good thing. So some of the things that first-time buyers are finding successes is taking advantage of the following: seller concessions. So we're still seeing seller concessions, but I will point out you're seeing less in certain areas. So I mentioned I'm in Reno, and in our area, we're still seeing seller concessions. But then if you happen to go buy in South Reno, which is a high demand area, you're going to have a hard time getting those because a lot of people want to be in those areas. But nonetheless, South Reno is not all of Reno, not all of the Sparks. There is still the possibility of these concessions, which help us with rate buy downs, both temporary and permanent. Permanent, pretty easy, right? Low rate, same payment, next 30 years. Temporary, got to be a little bit careful. There's a little bit of risk, right? With the temporary buy down, you may start at 4.2 and then go to 5.2 and then end at 6.2. So what I would just warn home buyers on that is make sure that you're okay at the ending rate. Because if things change and rates rise and you don't have a chance to refinance, you want to make sure that you're okay at that 6.2 or whatever the ending rate is. But still a good option to help keep payments down. And then, of course, we got down payment assistance, which in my opinion, down payment assistance used to be the option for families who didn't have a lot of money. And now I think it becomes a strategic advantage because we do have home buyers that have the down payment, they have the closing costs, but they want to create some space for maybe repairs, painting, roof, paying off other debt, or just having a reserve. And the down payment assistance programs that are available help us create that space that some of these home buyers win. So in my opinion, down payment assistance is now a strategic play that we can use for home buyers. The perfect market doesn't exist. Successful buyers move when their life is ready, not the headlines. So having said all of that, the 2026 state of the market is this. Your plan matters more than the market. The 2026 market rewards preparation, not perfection. If you have the right team, the right plan, and the right expectation, this is still a great time to buy. Real estate has always been a long-term wealth play, and that hasn't changed. So I'll share just some numbers. So year to date, my team and I have helped already 117 families secure financing. Now, I don't share that to impress you. I just share that to impress upon you how homeownership and the dream of homeownership is alive and well. And of course, thanks to our assistance, down payment assistance partners that help us create these bridges to get families to where they want to be. So thank you so much. I appreciate any questions, comments, and I hope that you got some good stuff out of this.
Thank you, Jorge. As usual, you are such a fabulous presenter with the latest and greatest, and we appreciate you being here. We actually had a question from an audience member. This is from Carol Wayman, who works there in DC on all kinds of important housing things. And so Carol asked, what kinds of new construction are you seeing there? And maybe more anecdotally, but they're in Reno, Washoe County area. Is it more single family, 3-bed, 2-bath, smaller lots, smaller homes? What's kind of the scene looking like up there?
That's a great question. And I would say, depending on the area, we're seeing a little bit of both. In South Reno, we're seeing some big, beautiful homes, 6, 7, 800,000, 2,000, 3,000 square feet. Then you go to Carson City and some of the builders there like D.R. Horton are building townhomes too that create, some possibilities. So I would still say the majority is single family. And I think everybody's challenge is just how do I build a single family home at an affordable price? And that's just always been the challenge. But I would say both, but primarily single family is still the leader.
Thank you. That's helpful. And I love that you kind of ended on the note of we hear repeatedly that, the desire is there, but it's actually happening. Homeownership is happening every single day in your office and across all of our lenders out there. And so certainly the challenge is figuring out how a home buyer can go from wanting it to being ready to buy it. What do those bridges look like? And that's something that our crews at Nevada Rural Housing and the Nevada Housing Division do, not only having access to those programs and some of those buy down options, but making sure that there's awareness out there and kind of what do they actually look like. So I'm going to hand it over to Josie and Kevin to dig into some of these program related pieces and details. How do we close those gaps? Who's an ideal candidate? And what are some of the things that homebuyers need to know about what you all have to offer?
Sounds good. Thank you, Katie. All right. So Josie and I are here to share about our homeownership programs. And I think one of the awesome things about our two groups here is that we work in such close collaboration with one another to really try to offer the right program at the right time for Nevada's prospective homebuyers. So we're going to just touch on our programs pretty quickly here to let you know what's out there and how prospective homebuyers can take advantage. Let's see. There we go. Josie, take it away.
Thank you very much. So as you can see, just as Kevin said, we work together with our programs, and it's been great because there's many things out there, many opportunities for home buyers. And as we start here, we're going to start talking about Rural Rocks and Worker Advantage program, the same program. And so it's actually for essential workers. It's $20,000 in down payment assistance that can be used towards down payment, closing costs, or to purchase the interest rate, to buy the interest rate down. It's kind of the first time we've done this, so it's very exciting to see this. Now, another thing for our Rural Rocks and Worker Advantage program is you do not have to be a first-time buyer. And the other thing, one of the big thing is you cannot own another home at the time of closing. Although you're not a first-time buyer, you have to make sure if you do currently have a home that you sell on that home, and you're not able to have that home at the time of closing. Now, income limits, they do vary by county. So, and the participating lender would be able to help you on that. So each county is different. One of the things is you must be an essential worker. And one thing to keep in mind, essential worker is very different right now is what essential is right now to what it was maybe about 5 years ago. And right now what we have as essential workers is anyone within healthcare, education, public safety, and construction. So those are the categories that are able to take advantage of the Worker Advantage and Rural Rocks down payment assistance program. And one of the biggest things is, yes, you must be a Nevada resident for at least 6 months. And another best thing about this is that, for example, if you are within one of the work categories of healthcare, education, or public safety and construction, but you haven't been here for 6 months, but your partner who's going to be on the loan with you you're able to take advantage of the program that way. So it is, we try to make it simple. We try to make it great just for everybody to be able to get an opportunity for home ownership. Now, currently, we started with Nevada House Division. We started with about 900 loans, and we're about 132 left. This started on December 1st. So just keep that in mind. Get out there, come find out about the programs, get in contact with your participating lenders, and they will be able to get you started. Kevin, anything you wanted to add to that?
Yeah, no, I think it's a phenomenal program. As we know, you had mentioned that this is kind of new for us. One, the funding source of this, came through the state legislature last year, which is phenomenal. It's probably the first time we've seen an investment like that by the state in homeownership programs like this. So it's an awesome opportunity. And then again, that rate reduction, being able to permanently reduce that rate to help with long-term affordability. Jorge mentioned that in his presentation. It's pretty awesome. And we don't see those rate reduction options very often through HFA or housing finance agency programs like ours. So it's a pretty awesome thing. And as Josie said, they started with about 900 loans. We had 200 to start with. We have about 155 left for the rural areas. So, one thing that we impress upon lenders, if your borrower is working or purchasing in a designated rural area, you want to use the rural program because those loans that are eligible statewide can really help those folks in the urban areas. So we have those two programs. They're complementary and provide a great opportunity for Nevada's essential workers. All right, we'll move on here to our next programs. So the other programs we have that are very complementary are called Launchpad and HIP DPA, or Launchpad and HIP for first-time home buyers. So they are similar programs. The difference really is the assistance options available and the income limits associated with them. So Launchpad and HIP DPA provide 3% and 5% down payment assistance options. That percentage is based on the loan amount. So 3% of the loan or 5% of the loan, that's what they would get in down payment assistance for the home purchase. That program allows incomes up to 165,000, and there's no first-time home buyer requirement. And as you can see, your borrower can own another home outside the state of Nevada with that program. So lots of flexibility with that, and just really helps folks, especially those that may have higher incomes, still purchase a home with getting assistance through one of our programs. Kind of the sister programs to those are Launchpad and HIP for first-time home buyers. Those are the first-time home buyer programs that come with stricter income limits that are set by HUD. And provide a 2 and 4% down payment assistance option. And as stated then in the name, it is a first-time homebuyer program, which means the borrower hasn't owned in the last 3 years. So it doesn't mean they haven't ever owned. They just can't have ownership in a principal residence in the past 3 years. And then if the borrower is a qualified veteran or purchasing in a targeted area, that first-time buyer requirement is waived, which just adds to the affordability, especially when purchasing in targeted areas. So those two programs are, again, complementary. Another tool at our lenders' disposal to help their home buyers get in, and no job requirement, specific job
Yeah.
requirement, no residency requirement for those programs. So again, lots of flexibility.
Great. One thing though, Kevin, why don't you touch on, because they are very similar programs, the interest rates. Now, Nevada Housing Division has an interest rate on these, and if you happen to have a homeowner who's actually purchasing in the rural area, it's the same program, but you get the benefit of a lower interest rate. You want to touch on that, Kevin?
Yeah, that's a great point, Josie. Thank you for pointing that out.
Yes.
So yeah, on the Nevada Rural Housing Programs, Launchpad and Launchpad for first-time home buyers, the interest rate is a quarter of a point lower than what you'll see on the HIP and HIP DPA, or HIP for first-time and HIP DPA programs. And that's just really to incentivize those purchasing in rural areas, get them that lower interest rate, and take advantage of this program. So it's a fantastic benefit and awesome. And if anybody's curious here and want to know what the rates are, they are on our respective websites. We'll have them listed here at the end. But I know hipnv.org you can find out there. And then also we have a direct link to our rates page, which is hellrates.org, HAL rates.org. So good information on both of those pages. And it really, those pages will show you or tell you everything about the programs in detail. And then at Nevada Rural Housing, we also have our Home at Last program, which is kind of our original, not kind of, it is. It started back in 2006. We've done about $11 billion in mortgages in that program, 60 million in assistance. So it's a pretty great thing. Currently, the Home at Last program does not provide assistance, but it is still a fantastic option for those that are purchasing and have money saved, but maybe they're looking for access to those low interest rates. There's an option that if the borrower qualifies for conventional and their income is at 80% of the area median income or less, they get lower mortgage insurance. So that also helps with the long-term affordability. And then there's no loan level pricing adjustments in any of our programs. So typically if you're purchasing a manufactured home or you have a lower credit score, your interest rate is going to be higher. The great thing about all of our programs is that the rate doesn't change. If you qualify with the minimum credit score of 640, the rate's the rate, and it doesn't change based on those other factors. So again, you may not need the assistance to help purchase the home in terms of down payment, but you still have options here that really help the long-term affordability with a program like Home at Last.
Great. Thank you, Kevin. So now I'll talk about our Home is Possible specialty programs. So the Home is Possible program for teachers has actually started just a little bit after our Home is Possible programs initiated in 2014. And with that, we've actually helped about close to 1,300 teachers with the Home is Possible for teachers. And this one is specifically for teachers in the state of Nevada, anything in a public school from kindergarten through 12th grade. Now, this provides $7,500 in assistance, which is forgivable during a 5-year period. It's prorated, but it does eventually get forgiven for the teachers. And of course, it was created for trying to recruit and retain teachers here in the state of Nevada. As you know, anywhere you go, there's a stretch. There's the teachers are trying to get as most students as possible in the classroom with them, and we want to help alleviate that with our teachers program. And currently, we extended the teachers program right now till the end of the year. So this is strictly for teachers, and so not that it's different than the worker advantage, but please contact one of your participating lenders, because this is currently one of the only programs that is forgivable for down payment assistance. We also have a Hit for Heroes. Now, our Hit for Heroes program is actually it was for a long time. We continue to keep it at a below market interest rate, and we're always trying to keep that up. And although, with our Heroes program, we just want to let you know that a VA loan can be used with any one of the programs we just mentioned. So if you have anybody out there, if you're one of our ex-military or military, first of all, thank you for your service. But on top of that, just know that we do have programs. Every single one of the programs we just mentioned, you are able to use your VA loan with. And that's the way we find a way to say thank you. Also, there usually some of the closing fees that are involved for our military, for the Heroes programs or the VA program, anybody with a VA loan, those are waived. Now, both of these programs allow income limits up to $165,000, and the borrower, of course, may only use may own one other home outside of the state of Nevada. So this is something we've actually tried to just make it easy for you. If you do have a home outside of Nevada, you are able to take advantage of these programs and keep those homes. Now, one other thing I want to add, none of these programs can be combined. However, and if you used a Home as Possible program, you wouldn't be able to use a Home as Possible again, but you are able to use a Nevada Rural program. So that kind of works out. We try to make it as easy as possible here, right, Kevin?
Right. Options, options, options. And that, from a lender perspective, Jorge could tell you no client is the same as the other. There are so many variables and differences, and being able to offer, a variety of programs. And even though it can be confusing because there are different requirements for each program, it's really intentional to help capture as many home buyers as possible, to help them take advantage of these programs and not make the program so restrictive that just no one qualifies. It's complex. There's a lot of programs, but that is a great thing. More is great. And we touched on a little bit about qualifying. The minimum credit score for our programs is 640. It allows debt to income ratios up to 50%, which is pretty fantastic. Also, for purchases, new homes, resale, townhomes, duplexes, condos, manufactured homes, you name it, just about everything is eligible. It must be the borrower's primary residence once they purchase the property, and they all come with a 30-year fixed rate first mortgage. Nothing surprising for the home buyers down the road. The rates won't, it's not an adjustable rate or anything. It's set, it's fixed for that 30-year period, of course, until they refinance or sell the home. And then, Josie, I'll just touch on eligibility real quick, since that affects Nevada rule more. Nevada Housing Division's programs are available statewide. Everywhere in the state, those programs are there. Nevada rural housing programs are eligible in all 17 Nevada counties with populations below 150,000. So that means that all 15 rural counties are 100% eligible. Washoe and Clark counties are eligible as well in areas that have that population below 150. So if we're looking in Northern Nevada, Sparks, for example, is eligible, and everything else nearby, like Carson City, Fernley, Reno, Carson City, Fernley, Gardnerville, those are all eligible. And then even down in the Las Vegas Valley, there's random pockets of eligibility, like Winchester. If anyone's familiar, smack in the middle of the Las Vegas Valley. How on earth could that be rural? It is, because it's based on population, and there's less than 150,000 people that live in Winchester. So, but we try to make that easy for our home buyers and lenders working in the programs, and our agents as well, with a mapping tool at halmap.org, halmap.org. You can type in an address and see if it is eligible in the program. But again, Nevada housing available everywhere, and Nevada rural housing available everywhere with a population below 150.
Okay, perfect. Now that we got you all excited, now how do you get started? In order to get started, you want to get in contact with one of our participating lenders. And the lender you select is going to be the one who determines your eligibility. They're going to apply the funds to onto your loan, and you want to let them know. You want to make sure you go up to and let them know that you know that there's programs out there for you with Nevada Rural and Nevada Housing Division, and because at that point you'd be able to initiate a conversation. And not to mention there are many other great programs out there as well. So usually most of our lenders, when they have access to our program, they have access to many programs. Now, one of the things that it is required for both of our programs is you complete a home buyer education prior to closing. The great thing is once you receive that certificate for home buyer education, that certificate is good for an entire year. And it must be a HUD approved agency. The best thing about all this is that your lender is going to be able to point you in the right direction for that. Or also, we do have it both on our both of our pages on the Nevada Rural and Nevada and Home is Possible on the Home is Possible website. You'll be able to find on our events page the classes that are listed. Or if you're not able to attend those, also we provide links for other resources as well. Anything?
Lots of home buyer education possibilities. Again, available through NHD and Nevada Rural. And then even for our programs, some of our partnering agencies like MGIC, Fannie Mae, Freddie Mac, they all offer first-time homebuyer courses, which are approved for the program as well. So lots of opportunities there for our home buyers to really get the nitty-gritty and learn about the home buying process and then learn about our programs. And I think a good thing to point out too is that I know, Josie, I'm sure you do. I get them all the time. Home buyer questions. They'll try to tell us about their financial situation. They'll want to know if they qualify, if they can buy, and that's not for us to determine. It really is for our lender partners, which is where we always refer our home buyers to. We offer the programs to our local lenders who are approved, and then they're the ones that use the program to benefit their borrowers and walk them through that entire process. So. Folks are often surprised to learn there's no application directly with Nevada Rural or Nevada Housing to use our programs. We just kind of sit in the background, provide the information, cheer them on, and send them off to one of the lenders to help them work through the process. So I think it's easier that way because there isn't multiple applications. It keeps the process a little more simple, and then the home buyer's working with their lender and not trying to go back and forth between their lender and Nevada Rural. But having said that, we're always happy to answer questions about the programs. But when it comes to qualifying, they really need to reach out to one of our program lenders. And that's it. You can learn more on our respective websites, Home is Possible NV or homeatlastnv.org. There's all the program details there, including links to the education, the interest rates, the program details, you name it. They're geared toward home buyers and agents and home buyers. So there's tons of information on both of our websites. And I hope it gives just kind of a quick window or view into, like Jorge mentioned, the programs that are available. And they really are helping Nevada families find a home and purchase that. And as we like to say, home at last. Josie, anything to add?
I think that's all. I appreciate the time for being here as long with together with everyone because this is a lot of great information. As you can see, there's many people out here wanting to help Nevadans, and I think we're at a great time to purchase a home or to look into what's out there for us.
Awesome.
Fantastic.
Thank you both. These two are the knowledge warehouses of the ins and outs of these programs, and it's a lot. I know we're cramming a lot of information into a 1 hour package, and I did want to underscore what Kevin and Josie just mentioned around the home buyer seeking out a participating lender and the lender really driving the bus on this thing. There's not an expectation for a home buyer to understand every nook and cranny of these programs. Start with the participating lender like Jorge Montoya. We have hundreds others on our website, but that really is not one of the biggest challenges for our borrowers. One of the challenges, and we're going to transition into our last speaker, Christopher Mora here. One of the challenges isn't necessarily the availability of resources or knowledgeable folks or folks who want to help. Sometimes it's simply awareness and overcoming some of the misconceptions and fears around the current marketplace. And so Chris Mora is going to talk through some of these myths, some of these things that are really hard to overcome. What's really resonating with potential home buyers right now, and how can really any of us, all of us, help connect home buyers with these resources. So, Chris, take it away.
Sure. Hello, everybody. My name is Christopher Mora, and I'm having technical difficulties. Today we're talking about awareness, and the current sentiment is that home ownership is impossible. That's what people think right now. Can you believe that? That's what they're thinking. But many consumers don't know what resources, programs, and opportunities exist to help them get them there. And it takes all of us working together to bridge that gap. So there is an awareness gap. Consumers are generally savvy when it comes to other major purchases, particularly automobiles and technology. So even before I even start going shopping for a car, I already know when I see 34 mpg, that's going to be 34 miles per gallon, 215 HP horsepower. Truck shoppers are very savvy. They know when they need a quarter ton versus a half ton truck versus DPA and mortgage. I'm not completely convinced that consumers are aware and understand the terminology and options in the DPA mortgage industry. Do they know APR versus interest rate? Do they know the DPA products available to them? Do they know what DTI is? I'm not completely convinced that it's the same savviness when it comes to our industry. And so what home buyers are really thinking are is generally not the truth. I get a lot of phone calls from home buyers, and by the time they call, they may have an idea that they don't necessarily need 20% down, but the misconception is out there. But I'd like to focus on the last one on this slide. My credit is bad. That represents the bulk of the conversations I have. And maybe it's true right now. Maybe you don't have a credit score that could qualify you, but that's not true in the future. Let's take a look at Gabby Go-Getter. Gabby Go-Getter is the quintessential phone call that I have. Gabby, mid to late 30s, she's a first-time home buyer. She understands the value of owning versus renting. She's curious and motivated. By the time Gabby calls me, she's closed her information gap considerably. She's asking amazing questions. She's asking the right questions. But 10 times out of 10, our conversation ends with this, but my credit score. So, time out, everyone. Let's reset. Let's start all over. Your credit score is not a fixed number. It changes, and it changes drastically if you're looking at a Vantage score or if you're looking at a FICO score. It's confusing. The score you're looking at might not even be the score your lender is looking at. So you've counted yourself out without even knowing the full picture. That's why it's so important. And that's why we always say contact your local lender. At the very least, follow them on social media, because if you're following someone like Jorge, for example, he has great content. You're going to learn so much, and you're going to get kind of what he projects is that he cares about your dream, your goal to become a homeowner. So all of us collectively kind of need to combat this misconception that homeownership is not possible. In fact, it is very possible. Nevada Rural Housing has products. Nevada Housing Division has products. And the people behind it, the lenders and the agents, are all there to support you in this goal. If it doesn't happen tomorrow or today, we're all committed to that path you're on to get you there. Uh, because this is what we're dealing with. When people are searching for homeownership and content, this is the content that they're being presented with. And this is a problem. The article, for example, 40% of Americans feel homeownership is impossible. If you go on YouTube, buying a home is becoming impossible. This is the kind of content that's being served to home buyers. And so they're writing themselves off without making a first, second, or third step into the process, especially when it comes to this general narrative in the media that's saying home ownership is impossible right now. That is false. That is 100% not true. Just as of yesterday, we've had a few loans come in with Nevada home buyers purchasing. So, nope, not true. Not true at all. It takes all of us to combat this collectively, because collectively we're just a larger voice and we're able to cut through all of this nonsense. Um, and the opportunity now that we're presented with is, yes, correcting information that's out there, but also reaching younger audiences so they adopt our messages and they don't follow the narrative. So, in reaching younger audiences, TikTok is a must. YouTube Shorts is a must. AI platforms, no surprise there with AI platforms. Adopting a GEO strategy or a generative engine optimization strategy, which is a practice of structuring and publishing content. So AI platforms like ChatGPT, Gemini, Claude can easily understand your product and service and cite it when generating answers. You can't assume that right now, without a GEO strategy, that users who are approaching these platforms are being presented with accurate information. And an organization does have the ability and they do have the ability to persuade and structure what GEO content presents about your organization. So, beyond the programs, connecting home buyers to opportunity really just takes all of us, lenders and agents, webinars like this, to reiterate as often as we can that the opportunity to purchase a home is there. There is a bridge to it. Down payment assistance, and your partners, your lender partners, and your real estate agents are on that bridge with you to take you to that path to make sure that happens for you. So thank you, Nevada Housing Coalition, for inviting me to speak to this panel. It's been great, and I hope you learned some information from these slides.
Chris, you are a rock star. There's no other way to put it. And this entire panel is full of brains and heart, and I hope you all felt that from what we delivered today. I have a lightning round question for this panel. I don't see any questions in the Q&A, so we're gonna roll right into our lightning round question. And it
I have a question.
yeah, go ahead, Chris.
There's so many credit score versions, it drives me crazy. Because I'll look at Credit Karma, I'll look at Bank of America, and they're so different. So, Jorge, what do lenders use?
Great question. I had one gentleman get mad at me. Jorge, you dropped my score. It's like, no, we didn't. Your Credit Karma and your Chase app, Wells Fargo app, whatever you use, that's just a consumer product, but it's not the residential mortgage report. So it's a way different scoring system. It is a little bit stricter, which is why you see a variance, but it's the residential credit report that lenders have.
Thank you.
Yeah.
And the best way to figure out what that real number is for this situation is to sit down with the lender. Start there. Any other questions of the panelists? I did not ask you all. I do apologize. Any other questions? We learn from each other constantly, obviously. Okay, well, noodle on this panel. What is one thing every future homebuyer should know?
I would say exactly what we're talking about. Don't let your credit score stop you, because if you sit down with the lender, they actually have a system where they help you. And I speak from experience, where you think you can't get there at any time. And maybe you've been trying for years. And then suddenly you sit in front of the lender, you'll find out that there's a system that helps you. I thought it'd take me a long time before I was, and within 6 months, I closed out my home. You'll be able and you're not going to know until you sit with them. Because if you're trying to come with a clean slate, you might be waking up monsters and things from the past that are going to affect you now. And I'm saying that once again because I know you. Jorge is going to tell you right off the bat, but I speak from experience and from what's happened to me. And at the same time, you're probably paying things that you don't need to pay when you're purchasing a home. And so just go and get in front of the lender, speak to them, let them see what you have, and take it from there. And I'm going to promise you, you're going to feel like you just want. You can feel like that's probably the worst that they've seen. They see everything, and they're there to help you. They're in the business to help you get into a home. That's
Mhm.
their goal. They want to help you get in. So approach them, talk to them, see they're fabulous. As you can see, we have them here, and so is everyone else. But don't let that stop you.
Josie, I'm going to pick up on what you said there that, buying a home is intimidating for anyone, even the ones that are most informed and have done all the research and closed that information gap that Chris talked about. It's still overwhelming. And what I reiterate to our home buyers all the time is that they have their loan officer, they have their real estate agent, they even have their title agent and potentially an insurance broker. Those folks are all there to help guide them along in the process and protect their interests. So I always tell them it's important to understand the process, but also to lean on your team to walk you through the process because they're the ones that do this every day, and they can help make it seamless and less stressful. So. Don't let home buyers get overwhelmed. And then I also wanted to add my own little quick lightning round point here is that home buyers are asking all the time, when is the right time to buy? The answer is if they can afford the payment right now, it's the time to buy. People get hung up all the time on how home prices are rising, interest rates may be higher than they were during the pandemic. But we always know those are changing. Home prices generally rise over time. There may be dips here and there, but they consistently go up. So that's not likely to get better. And then interest rates, we never know. They're market volatile, and if rates drop sometime down the road, there's the opportunity to refinance. But I always say if you can afford the payment now, now's the time to buy.
Nice. Can I piggyback off of that one? That's perfect.
Sure.
So one thing every buyer should know is trying to time the market is one of the biggest mistakes, which is what Kevin's talking about. And I'm looking down because I've got some stats here, and about 62% of buyers delayed waiting for lower rates. That's a large group of people just hoping. Hope is not a strategy, right? Most buyers are expect rates to drop, but in that expectation is what's keeping them stuck. And what they may not be factoring is that meanwhile, prices and long-term costs continue to move up. So the cost of waiting is often higher than the cost of just buying.
And I want to add to that a lot of folks, just like he says, you're waiting for the rate to buy down because you have your eye on your dream home. Well, when that rate buys down and you have five, six other people with their eye on that same dream home, what's going to happen? That seller is going to be out there, try and look, okay, who's going to give me the most? And just like Jorge said, it's not going to make sense at that point. You're going to end up probably just a little bit more behind than what you would if you just look at the rate and have the lender look at the rate with you. Let them see what it would be if it goes up or goes down, what the difference in that payment would be, especially if you're getting down payment assistance. Sometimes that weighs out to what the difference might be in that payment, way above and beyond of what you're going to receive. So, like we say, I love you touched on that because a lot of folks don't realize that when they're waiting for that rate. So is everyone else while they're keeping an eye on that one home.
Yeah.
All right, Chris, take us home with your piece of
Yes, I would
wisdom.
say know our websites. We are nvrural.org. It's a great place to start for information. Home is Possible, I believe is homeispossible.org. Is that correct, Josie?
Homeispossibleenvy.org.
That's it.
Yes.
Great places for resources to start your own path to bridging that knowledge gap.
Fantastic. Well, I think we are right on the money, Ms. Amanda. Happy Homeownership Month to everyone. We will follow up with even more goodies for Amanda to put in the follow-up links, etc. And we appreciate everyone's time. Please reach out with questions, thoughts, home buyers who are ready to start their journey.
Thank you, everyone. I just wanted to say this was super fun to watch all of you. You can definitely feel the passion for homeownership coming through in each of your presentations. So thank you. We will be sending, as Katie said, some additional resources, contact information, and a link to this recording sometime before the end of the week. Have a great afternoon, everyone.